Welcome. My name is Paul Mitchell. I'm a professor of agriculture and applied economics at the University of Wisconsin in Madison, extensive state specialist in cropping systems management, and director of the Rank Agribusiness Institute. The question today for this short video is, have my ARC and PLC recommendations changed for 2021? We've all watched as the prices on the Board of Trade for 2020 and now the 2021 crops have gone through a substantial price rally. You can see December corn futures in the 450 range yesterday, soybeans in the $12 range for November delivery. These are good times for corn and soybeans on the market. So the question then is, have my recommendations changed? These recommendations are developed earlier in this year or even late in 2020. And the short answer is no, my recommendations are still the same. I still recommend signing up for PLC for corn, county ARC for soybeans. If you're going to use SCO, then you got to sign up for PLC for your soybeans. Wheat, still recommend PLC, oats, county ARC, and then barley, sorghum, and sunflower, PLC. I'd like to kind of go through the logic a little bit again, just sort of update it given this higher prices and explain why I still think these recommendations are the right recommendations. So PLC pays if the price falls below that reference price floor. ARC pays if the county yield falls below its guarantee. County guarantees uses that same price and uses the Nass County yields. What it uses at 86%, and it uses the Olympic averaging of historical price and yield county revenue from 2014 to 2019. The key there is the prices are going to be the older prices. 370 is what's often going to be used for corn. And so what happens then is that doesn't use that Board of Trade price where we're watching at the 450, for example, yesterday on the board. And so given these older prices, those guarantees are relatively low. They do not reflect current price trends on the board, for example, like crop insurance. So now let's think about what happens as the expected price increases. We've seen this 2021 price, the national marketing average price is creeping upward. What we should expect for payments? Well, first off, expected payments are going to decline. As the price expectations get higher, the likelihood and magnitude of the payments come down. And that makes sense. Less likely you're getting more and more away from that 370 floor for corn or 840 for soybeans, so the PLC payments are coming down. ARC will as well because it depends upon actual prices. They are multiplied times county yield. And so as the prices get higher, the expectation of actual county revenue is higher and more likely to be above the guarantee and trigger no payments. However, what's different is the PLC payments are going to come down faster than the ARC payments. And that occurs because PLC is only about prices. And so as the prices go up, you move further from the floor, the prices come down. ARC comes down more slowly because it also has the opportunity to make payments when yields are low. And so that provides a little bit of cushioning of the decline as prices increase, expected prices increase. So it doesn't come down as fast. And so really the question is, does PLC come down so fast that it falls below ARC or before they both go to zero? If it does and the prices are in that area, then maybe ARC is a better deal. What I've done here is just go to the Farm Doc Simulator tool here. The link is there. And look at running for corn and soybeans, just to give you some examples here. The one on the left is corn, the one on the right is soybeans. PLC is in black, ARC is in red for Dane County, and green for St. Croix County on the soybean side. And what you see here, very much the case that PLC comes down more quickly, ARC comes down more slowly because of the yield, county yield effect. It comes down a little more slowly. There's a little cushion there. And see for Dane County, for the 150 bushel per acre PLC yield, it's always the case that it comes down fast, but they both rush towards zero, and ARC and PLC get there about the same time. So always in the case, PLC is better by a few dollars per acre as you get to really high prices here. Soybeans in St. Croix County, though, it's the reverse of that. You can see it crosses over. PLC comes down so fast. ARC comes down more slowly. You get up in that $10, $11, $12 range. You can see ARC is definitely more preferable by a few dollars per acre. But both of them, what you notice at these higher prices, $4.30, $4.50, $11, they're both talking very small payments, less than $5 an acre easily is what you should expect. Now what I'll do here is keep the yield the same, but switch the counties. And so orange or red is Dane, green is St. Croix. Both have 150 over here. On the soybeans on the right, both of them have 45 bushel per acre. And what you'll see is that same thing happens again. PLC comes down more quickly, but in St. Croix County, ARC comes down slower. And so you get a crossover point there where they switch over. But if you look at the prices we're talking about, say 410, 420 for corn, Dane County, it's definitely still better to buy or sign up for PLC. St. Croix, it's about the same. You can see not much more, maybe $1 difference. And you're kind of, these are projections, they're not actual payments. Same thing over here, $11 soybeans, $12 soybeans, whatever you think the national marketing average is going to be. ARC is a little better, not a lot better, but a little better in St. Croix County, whereas in Dane, it doesn't matter. They're both going to be very, very likely to be very small. So the point I'm trying to make is that these high expected prices, both of them move quickly towards very low payments, and the difference between them is fairly small, and they're slight. You're worrying about a few dollars per acre. So we can spend a lot of time worrying about the technicalities of all this, but I think we're just thinking too much. That's really what I think. Lots of things. When expected prices are high, ARC can have slightly higher average payments for some of these riskier counties that are not as correlated with the national prices, but the expected differences are small between ARC and PLC. And a lot of me is starting to wonder if how much of this is really an artifact of the simulation model and not realistic. Farm Doc Simulation Tool says ARC is better for some of these counties, like St. Croix County. But again, they're slightly higher variability in the yield, and they have less correlated with national prices is what drives it. How much that's using historical data to estimate these parameters, and then they use that in the simulation model. It's still a modeling of what might be. I think we're worrying too much about the wrong things here. If you'd be better off worrying about your crop insurance and your marketing than you would be worrying about your ARC and PLC decisions. The goal is to manage risk. ARC and PLC are not right now in this year effective ways to manage price risk and yield risk, revenue risk. You're better off using crop insurance and traditional forward contracting and some of these other options that you can talk with a marketing organization about to use to lock in some of these margins so you can make sure you have positive margins for your corn and soybeans. I wouldn't worry about the ARC and PLC. I'd focus on crop insurance. If you're concerned, buy higher coverage levels, you pay more, and then you can use a marketing company to lock in these margins. I just think that's more important way to manage these pricing and yield risks this year. If you want even more coverage, you can look at SCO and ECO. These are a couple newer policies. ECO is brand new this year, and I'll talk about them at the end a little bit. Here's some examples of these prices. I've updated the 2020 prices from previous videos because it's gone up a little bit. It's up to 430 right now. They haven't had an update in the 2021 price yet. The USDA will probably come out sometime this month with an updated long-run forecast for the 2021 marketing year average price for our major crops. But right now, we're still this is using the estimate that came out in November of 2020. So I would expect them to come up somewhat from this, but not way up. So you can see corn, PLC is a good deal. Even if it comes up to $4 or something like that, there's still a substantial probability, given the volatility in these markets as we're going through this COVID economic recovery. It's going to take a while, and the markets are extremely volatile, jumping around a lot with new news, new information, new worries about policy changes or economic issues that are affecting the country and the globe for that matter. Soybeans, my recommendation is ARC. You can see why. The prices are way above that floor of 840. It's just, we're talking now, you saw those numbers. Board trades around 12. Marking your average price is going to be below that, most likely. They'll update their estimates eventually, but even if it's, you see here at $10, it's still a long ways away from that 840. Even with volatile markets, ARC is more likely to trigger payments for a lot of counties based off of yield losses at the county level, not price losses at the national level. Wheat, this is one thing to do in this one. If you have any wheat base, sign up for PLC. It's the expectations, even with these new markets, are still for wheat prices to stay below that 550 PLC reference price. So strongly encourage, if you got wheat base acres, sign up for PLC. Oats is the other way around. It's above it quite a bit, like soybeans. I would stay with ARC on that one. Don't expect big payments for oats. It's going to take a yield loss. You can see the figures here. Barley, it's just like wheat. Sign up. If you got barley base, sign up for PLC. Sorghum is like corn. I would still, if you have any sorghum base, sign up for PLC. Even I expect this 2021 to come up some, but it's not going to be way above the reference price for sorghum. Sunflower, it looks like the same. It's going to be PLC as well. So in general, I hope I made it clear. My recommendations for Wisconsin farmers for 2021 are still the same. PLC for corn, soybeans is ARC. If you're thinking about SCO, then do PLC. Wheat, PLC, and oats is county ARC, and the other ones for ARC, PLC. I wouldn't worry a lot about the ARC and PLC choice this year. They are not effective risk management tools in this type of economic climate. They're probably not going to pay. You're better off using crop insurance and marketing tools to manage your price and income risk. Buy higher insurance coverages, use these marketing tools out there to lock in these margins before market conditions shift and they disappear if they do. And if you want more coverage, just look at SCO and ECO.